This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news equity markets are under severe pressure in extreme fear mode, and that is despite the current economic activity signals being relatively sanguine. First in the US, the widely watched ISM Services PMI bounced back to expansion in July with a better reading than was expected. The new order component expanded. The companion S&P Market Services PMI told a similar story, featuring rising output. And the US Fed's Loan Officers Survey for July noted that while credit standards were little changed for consumers, demand was weaker, especially for real estate loans. For businesses, banks tightened credit standards overall, but demand for loans was holding positive and little changed. This survey is not picking up any special sign of credit stress for either borrowers or banks. And the Caixin Services PMI suggests the Chinese service sector picked up the pace of its tepid expansion, coming in better than expected and better than the official measure. In Japan, it was the same. Japan's service sector economy returned to growth in July following a slight dip recorded in June. Gains in both total activity and new business were solid amid improved customer numbers and demand conditions. In India, business confidence rose in their services sector and it maintained its rapid expansion. But inflation pressures from its high demand are now showing through and a warning flag that they may not be able to keep up the pace. And in other big economies like Brazil, their service sectors are also expanding at a positive clip. There are others like this, but you get the picture. But in Australia, their service sector is easing back, no longer expanding. New order levels fell there. And of course, there'll be a sharp contraction in New Zealand when we get the July services PMIs here. Later this afternoon, the RBA will release the results of its monetary policy meeting today. A rate hike, talked about until recently, seems to be off the table now. A cut seems unlikely as well. In fact, markets aren't pricing in a rate cut there until November. That is in contrast to New Zealand, where a full 25 basis point cut is priced in for next week's RBNZ MPS and another 3 cuts by the end of the year. That is a sharp repricing by markets in just one day. The US Treasury 10-year yield is now just on 3.77% and down 2 basis points from yesterday. But Wall Street has started the week with the S&P 500 down 3.2%. Overnight, European markets were down by about 1.8%, bookended by London's 2% drop and Paris's 1.4% fall. Yesterday, Tokyo fell an amazing 12.4%. Hong Kong was down 1.5%, Shanghai was down about the same, but Singapore fell 4.1%. The ASX 200 fell its own sharp 3.7% and its worst day since the pandemic, but the NZX 50 got away relatively lightly, with only a 1.5% retreat in Monday trade. We do need to remember it is silly season in most markets with relatively light summer trading. Changes get magnified when volumes are light and many people are at the beach. However, the sharp rise in fear has drawn in unusually heavy trading volumes now. The price of gold will start today down $39 from yesterday at $2,404 an ounce. And oil prices are $1 lower again at $72.50 a barrel in the US, while the international Brent price is just under $76.50 a barrel. And the Kiwi dollar starts today down 10 basis points from this time yesterday at 59.3 US cents. Against the Aussie, we're down 20 basis points at 91.3 Australian cents. Against the euro, we're down 80 basis points at 54.2 euro cents. That all means our trade-weighted index starts today at 68 and down 60 basis points. A sharp rising yen had influence on this too. And the Bitcoin price starts today at $54,584, down another extreme 6.2% from where we left it yesterday. That's a $3,600 drop in a day. Volatility over the past 24 hours has been ultra extreme at plus or minus 10.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.